All right, guys, welcome back to the channel. This happens before every single parabolic blow-off top that we have seen throughout the years on BTC. We are recapping October and looking forward to November and a little of December, obviously finishing out that Q4 and what happens into Q1 of 2025. The data, the charts, and everything else in between. We're looking at the macro cycle here. You're with me, Jason Pizzino, Bitcoin, crypto, stock markets, and the real estate cycle. So basically, this is your update for November, moving forward into that Christmas period. So we've got a massive agenda to get through today. Again, the goal is to be under 30 minutes. Let's see how we go with that. Bitcoin, S&P, real estate. This is the big one that you want to bookmark and continue to come back on for the month of November. It's basically part of the monthly series. You get to see this every single month. You can see what we go through here: October, September, August, July, so on and so forth are all there on the channel for you to review for yourself. Anywho, number one, forecasting 10 months on. Has anything changed? So basically, I did some forecasts at the beginning of the year and just seeing how that has progressed throughout the year to see if we're on track with where these markets are going. To me, that's pretty important to see whether the analysis, the macro outlook has continued to play out. What have we got wrong? What have we got right? Number two, October recap. 3, real estate. And then we'll get into the rest as the video progresses. So first up, I just want to have a look at these couple here. October recap and then the 10-month as well. For October, there was some data that suggested if September was green, then October would be green. We've just seen the close now for October. And as you can see, for pretty much each of these readings, you got September, October, 7-7, right? Green, 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 September, October. 2016, green, 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 and 2010. So there was one time that it didn't happen, and that was back in 2012. So again, the statistics played out, and we had a green October. So let's have a look forward from that point. If we see these two being green, what are the chances of the next two being green? Well, there is a probability that we would see at least one of the months, the next month's green. So whether it's November or December is yet to be seen. But in terms of the percentages, November has a better chance of being green than December. I suspect we'll see more upside. As obviously, I don't know whether it's going to be red or green or both are going to be green. Just from the numbers you can see here, a green October in this case, and you had a green November, December, so basically a green quarter. And I think we'll see a green quarter for the S&P, which means we'll possibly also see a green quarter for BTC. Going back to 2017, which was the top of the bull market, there's October, November, December. The year before, which is similar to 2020, which is similar to now, 2024, you also had green September, green October, green November, although smaller there was 6%. And then you had a green December. Again, the year before, 2015, green, green, green. And then 2013, which was the peak. All right, you had basically a flat September, still slightly green, big green October, big green November, which called the peak of the market. And then December came down. So that was the end of the bull market there. Green, red, green, green. And finally, it was 2010. So pretty early days. So the data, at least for now, is suggesting we'll see at least one of these months green. The quarter would probably finish out green as well. So here we are on the quarterly data. 2024 is currently in green. Obviously, 1 month has passed. 2023, we saw a green quarter. That was the bear market. So let's uncheck that, see how we go. 2021 was the top, and that was October, November, and then started to come down in December. So still just made a green quarter in 2021. Another green quarter in 2020. 2019 was red. 2018 was red. That was the bear market year. So we'll turn that off and just see how the data looks. 2017 was the top. 2016 was the lead up year, which is what I'm considering this year. So 2024. Year before that, 2015 was also green. Well, 2014 was the bear market year. Year before that, green, green. And then you started to get into the obscure data back in the early days when Bitcoin was trading underneath 10 bucks. Okay, so you had a red quarter and a green quarter here. So how many is that? You got 12 readings, 10 wins, 2 losses, 83% chance of a green quarter, 8 out of 10 times. So this is basically the best quarter just in front of Q2. So I don't think that comes as a surprise to too many folks. We'll see how it all plays out. 6 monthly, July, December, pretty green there. If you take out the bear years, 2022 and 2018 and 2014, you have another pretty good reading there, 83%. Okay, so the next 6 months, or the next 2 months of this 6 month period are looking pretty good there for BTC. So next up is a bit more of the outlook, the longer term here for Bitcoin, and then I'll get into a bit more of the traditional finance. Michael's Elliott Wave has been tracking very, very well, been following it on the channel, and obviously he's been putting this out now for over 12 months and is tracking very, very well. Elliott Wave still suggests further upside, and since he posted this a few days ago, we've seen Bitcoin climb and also the total crypto market cap climb to get back to previous tops. Yes, in the last 24 hours, it's had a pullback, but I'll get to that in a moment, which we saw yesterday, just recently, and I told you about those signals to not follow, basically contrarian signals. Anywho, this is still playing out, and over the longer term, still expecting high prices because there has not been an invalidation to these wave patterns. This is looking for further upside ahead. So we looked at October. We've got to get into the real estate cycle as well, but I'll just make a quick mention to TIA Premium. We have the November-December period coming up. If you want to learn more about trading and investing longer term, I've got my short-term portfolios, my long-term portfolios, Michael's short-term trading on there as well, plus the community to chat with active traders. That is your TIA Premium. Check it out or get on board with the free crypto and economic report so you can get more updates about that. Let's keep going now with the real estate cycle. So we are actually somewhere in this winner's curse phase. You've probably heard me talk about that before, but I'm bringing this one up because it's a post I made back in January. So I just want to see how we're going with all of these calls that I made now 10 months ago to the day. So some of them may have seemed easy at the time. Some of them were a little more tricky. Interest rates, people were just adamant they were going to come down all year. And obviously they only started coming down in September. So 9 months later, basically it wouldn't collapse the market. Most people thought it would. And of course the markets are up much, much higher than January. That's Bitcoin, that's real estate, and that's the stock markets. The bearish inflation narrative will die out. That was very evident in 2023. So that's basically nearly gone. And when that goes, then it's time to pay attention because we might start to see things get a little bit shaky. The next thing, Bitcoin won't trade below 25 grand. Yep. At the time, it was around 42K. So I don't think this year is going to close below 42K. So this year is going to be a green year. Remember, this is at the beginning of the year, 10 months ago. We're only just trying to put the probabilities on our side, make decisions at that time with that information, so then you can hopefully go away and make some money from it. Number 6, US stock markets won't trade below their October 2023 lows. That was a very significant low to the markets. So October 2023 was way back here, and these were Middle East conflicts. January came right around here. Okay, so that's where I was making the call, and it was not a new all-time high. It had just touched a few all-time highs. So there was still that possibility that this market was going to come back down, collapse into a recession, and it obviously did not. And on the channel, you guys are watching, we said that at the time. There was more upside, and I suspect the same thing in 2025 as well. So let's get back to these, quickly tick through them. Banking crisis low, no chance. That was March 2023. People thought it was going to go down, no chance. Now, this was another big one at the beginning of the year. People thought there might be a blow-off top, so the flip side. And I'm saying there is no blow-off top, so end of the cycle in 2024. I said that at the beginning of the year. It hasn't happened. I don't think it's going to happen. We have 2 more months left. I could be wrong, but again, this is the evidence that I'm following here. US stock markets will close higher. Well, I don't think anyone disputes that now. And if that's the case in the beginning of the year, well then get the hell into the market so you can ride the move up. More bullish sentiment will enter markets in the second half. I think we've started to see that. So some of the bearishness have dropped off. That could be disputed. Maybe you still think there's more bearishness than bullishness. Either way, markets are up, so you're making money from the price, not just the headlines. Real estate, well, the data says that's up too. I can go into more detail in future videos, but essentially this is the update to know what we're doing next. What are we going to do in November, December, first quarter of 2025, and so on. Strong crypto projects will outperform Bitcoin. Yes, some did, definitely at the beginning of the year, and some continue to hold this level. but a lot did not. But again, I guess I could say, well, that was strong crypto projects. This is the big one I got really wrong. ETH will outperform Bitcoin and close higher than it opened. Now, of course, we have 2 months to go, and ETH could jump from that point. I still think it's going to be absolutely wrong, and Bitcoin outperforms ETH this year. So that one, out of the 13, I was wrong. So 12 out of 13, still early days, but we'll wait and see, right? Number 14, more bearish narratives will come and go. Wall of worry going higher. All this stuff was really evident at the beginning of the year, and it just continues to drop off people's visions, right? Because the markets continue to go higher. So that's a recap there. Everything seems to be on track. Nothing much has really changed. Real estate cycle on track. October looking good, and potentially means we've got another green couple of quarters coming up. Volatility into October, November, quarter 4. Also long-term outlook basically is similar to what we looked at here. Probably volatility leading into the election. I don't need to make, that's a prediction that anyone can make. So what we want to look out for is something that's a little bit trickier going forward. Quarter 1, I think we've got some more upside. We'll get into some time targets in a moment, but essentially there could be some time targets around middle of quarter 1, sort of that February, March period, where we might see a correction. And I think we've got further upside to go, as I'll show you in a sec, but that would be a pretty significant time period to watch out for, again, like we saw in January, February, March of 2024. We saw a top in January, a top in March, and then the trend began to change. So at those peaks, people will not believe that it will change, okay? So subscribe, and I'll leave a link to yesterday's video at the end of this video. So that's the first one that pops up, because I go into that in more detail in regards to those time frames and what to look out for. Global indices, bull markets, most of these are at all-time highs or trading around all-time highs or getting close to them yet again. Market sentiment seems to be up. Sure, at least if you're watching this video on the day that I release it, the markets were down overnight, but longer term, that's what happens. I think they're going up, and then you get the corrections. Sentiment's changing. Bitcoin March signal almost complete. That was our 3-day down. And then I've got the price action to get through with you guys. So let's carry on. S&P 500, quick check here. The ending of the year. Some volatility into November, moves down, and then that's a very strong end to the year. So every year ending in 4, that's 2024. This goes back, 60 years, and this will be the 70th year as well. Every election year, every year between those there. So 73 years. The red line is the actual, that's what we're doing, and the blue line is all of these put together. So essentially, it's been tracking relatively well, and then you get this ascension towards the end, like faster ascension. So we'll see whether that happens for this year as well. I think there's a very good chance that continues to happen, because these 10 months of the year have been a lot stronger than at least some of my cycles I was looking at were, and I guess what the market had expected as well. So I think we might have a stronger close to the end of the year. Now, there's some really interesting developments on the short term, but I'll leave that to either a video tomorrow or next week that I get through with you. Things have played out and have checked this list, but this is the November update. So let's continue to carry on and get on with Bitcoin now. So Bitcoin ETF flows, huge days the last 2 days, have again called a short-term peak. It worked an absolute treat. Fear and greed index also at those high levels, that extreme greed there. Let's refresh this for the last day as Bitcoin came down, and only just a slight drop there to 75. These levels can remain elevated for 2 to 4 months if they get going. That's what we've seen before with the historic review of the crypto fear and greed index, in which case you would expect to see higher prices to continue to push that sentiment higher. So another factor going into the market sentiment for Bitcoin leading into November and December. The next thing we're looking at is the curves. So this is exclusive to TIA crypto. We're just looking at the actual line, which is the blue, and the other line. So in this case, I'm looking at the halving. We are on track for the same sort of ending to those halving years, basically November, December up. There are corrections along the way. That should be, everyone should be getting used to that now. You see markets correct after significant moves to the upside. If I open up the bullish years, we have tracked similar to some of these bull years as well. You've got this downtrend on the red line, The blue is the actual. So we topped around March, and then you've seen this downtrend. Now we're starting to come out of it. And you can see with the bullish years, they were coming out of it from around October. So again, there's a strong move into November. And if anything, you would see that December period pull back a little bit. And I think that is weighed or skewed by the 2013 bull market as well. So as I mentioned through here, looking at those monthlies, if there was going to be a red month, potentially December, just based on the probability. So it's slightly lower than November. And then with the curve itself, you can see that it sort of drops off. There's a little bit more volatility in December than November, just historically speaking. But if you saw that in November and you saw November do that sort of pullback, well, then you would probably say that December is going to be the higher month. So keep those in mind as we move forward through November. US election year. So regardless of what happens November, December, each of these periods, post these periods, straight up. November, December, there's November on the gray line, straight up. November on the gray line, straight up. This was a little bit shakier last cycle, so we'll see whether this cycle is playing out more like 2017 or more like 2013, where you just had a basically straight up year. Next is more of our Gann style analysis. So this gets a little bit more granular. The stuff that I put more weight on than, I guess, those other pieces around Bitcoin analysis, because this stuff has worked and shown to work for decades upon decades on all markets. So anything with a chart, you can use this sort of analysis. So I'm looking at timing here, measuring time frames from swing bottoms. Those are very pivotal key points in the market. So if you can start to do your measures from those times, that's going to be able to give you at least a forecast date. Doesn't mean it has to happen there, but a forecast to help you think, well, maybe now is the time where I get a little bit more defensive, meaning maybe I'll take some profits off rather than throwing more money in at those at the peaks there or the end of time frames compared to what I threw in earlier in the time frames. You definitely want to be going heavier at the bottom and lighter at the tops, wherever those tops might be. So that's the idea here, is to basically set you up so that you're not acting like an idiot at the tops and you're acting smart at the bottoms. As simple as that. So in terms of the time frames, we have consolidation areas, we have time frames of how long it's moved out of those consolidation areas, and then we just point them forward. The moment, August is the low. So the market has been going up for 2 months, and this is something that I would say 98% of people absolutely forget, which is why these things continue to repeat over and over again. So they forget where the market has come from. The market has come from these lows 2 months ago. August, September, actually 3 months ago from the low in August, right? So it's been nearly 90 days from that low. And essentially, people might think, I guess what typically happens is once this breaks through and the excitement comes back, you have the greed readings continue to get up in extreme levels. You see the Google trend words continue to climb higher and higher. They think that's the point where the market started from, because that's where everyone starts to look. But they forget to look back, even these shorter periods. So you've got this now to know that, well, it's been going on for about 90 days so far. How much actual time is left? It's kind of like a sports match, maybe a football game, and you've got, 80 minutes in the game, thinking of NRL here, and you know that the game's already been going on for it's nearly at half time, and you've only got one half left. But the majority of people think the game's just started. And so they're playing from the beginning, not knowing that it's already halfway through. So with that in mind, let's measure what we've already seen throughout the cycles, what the market has done. From the low to the top. We've measured these many times before, so I won't hold you up too much. 7 months, previous move. What we just did that was 2021. What we did in 24 was 6 months. So basically, out of these consolidation periods, how long do these moves end up going until you see a significant stopping point? Maybe the market goes a little bit higher, but basically, there's a significant stopping point there. 4 months of consolidation measured from the low point to that top, basically 6 months. So you had another few months of consolidation with another few months of that breakout point. So everyone thinks this is the bull market. Well, the move had started already 3 months earlier. Here, you've got pretty long moves. So I want to measure from this swing bottom on the breakout of the top. So there's the all-time high. And then we had a new all-time high from that low to the top. You had 9 months. There was a monthly swing within the trend, but the trends were still up. Monthly swing bottom still intact. Market was going up. So we have 6, 7, you have 5 here, just looking at those long streaks. 6, you can call this one 9 from the swing bottom low here, or if you just want to use strict rules, basically mechanical rules where you're just measuring lows to highs on swings because that makes it life nice and easy. Well, there's 5. Take it back to the previous cycle. Consolidation, low to high, 6 months. And for this final one here, basically 2 months straight up, or from the swing bottom to the top, 4 months. So you can put all those numbers together, look at an average, and also look at the shortest period to the longest period. So roughly, I'm going to skip out 2 months here because I think we have longer to go, but obviously you could put 2 months in. We've already done 2 months, so it's going to be over that. 4 to 9 months with an average in there of around 5 to 6. A median, there was multiple 6 and multiple 5s. So if we do a 5 and a 6, that's going to take us out to January. So quarter 1, which is what I mentioned. Point number 5, quarter 1. Watch this area. So that's 5 months. 6 months is February, 7 months is March. Basically quarter 1, all of those periods there. 6 months up, maybe we do a 7 months because this was a longer consolidation than the previous one. But either way, I'm going to be watching each of those months, January, February, March, for any sort of signs that things are getting a little bit overheated. During that period, people say prices are going to go much higher and you're an idiot. Maybe the price is at 100, 120, I don't know. And they're saying, oh, this thing's going to 300 because Michael Saylor is buying $42 billion of Bitcoin. All that sort of shit will be said at that time. So with that in mind, keep these time frames on your chart and watch the swings. If the swings start to break down at those points, could be another sign to say that, well, it's probably getting overheated. And do the absolute minimum thing you do is just don't start throwing more and more money in towards those timeframes. Now, I would say that might not be the final top, but it could be time for a period of rest or even just a correction. We still need to wait and see. The point of this is to not go stupid at those times and to realize that maybe we could be putting a little more in at these times in the market. So with that in mind, let's have a look at the USDT. So that was basically the timeframes here. November's looking good. The timeframes forward looking good. Quarter 1 is something to pay attention to. USDT dominance is trying to break down from here. This is going to be good for Bitcoin and cryptos. And if this does break down, we can use the same analysis that we used for Bitcoin in terms of timeframes to the upside. We can use it here to the downside. So again, I went through and measured these moves. They're roughly around 5 to 6 months. Basically, if this thing's topping, USDT's topping, that's usually a low for Bitcoin. It's not the cycle low, but a low. Or it could be a higher low, right? But if it's getting back to this line, then it could be a top. So it could be an intermediate top. It could be an all-time high. So we have a little more room to the downside here from where the USDT dominance is. There's a 50% level, just a few ticks away, like call it 9% down, and that level is about 4.74%. And then we could go down to the 50%, the diagonal. Again, it's about 4.2, 4.3% USDT dominance, and then all the way back to these lows here at around 3.8 dominance. So if you start to put these together, and this thing absolutely dumps, Bitcoin skyrockets in November, then you might say, well, it could be coming earlier because of the support levels coming in for USDT. If this breaks down, then we've got a little more room to go. It can run and break down this diagonal line, which would be pretty bullish for the markets. A lot more money should be flowing in from USDT dominance, and that would basically kick off a major move. But as it stands, we are 2.5 months now coming into our 3rd month of the downtrend, getting rejected from the 50% level. So again, it seems like there is still more room for Bitcoin and cryptos to move in the month of November. So more upside for November, December, at least quarter 4, leading into that quarter 1, where you would see weakness in the USDT dominance. So we've got some signs for invalidation levels. We have signs of there's more room for the markets to move. Let's have a look at the total cryptocurrency market cap now. Similar sort of thing here again. The 7 months all lines up to around quarter 1. Everything's still on track. Markets have been going for about 3 months now to the upside, breaking past 50%. And as October has just closed, Well, we have our first close above the 50% level since July. So nice strong signs here. Also above the diagonal and above the 50% level as we just covered. So it's in a stronger position now with the move up here. So timeframes for the total crypto market cap, Bitcoin, ETH, stablecoins, everything, right? This includes everything. A few measures that I've seen this market do so far are roughly 5 months. 5 months from the low to the top, 5 months from the top to the low, 6 months to this peak, and then 5 months to this bottom. So I'm just going to take this back to around 5 months because that seems to be where the energy is shifting. The market tends to do these sort of 5 just over to 6 month period moves. If it's that stronger move like it did into the March peak, 5 months again is January, 6 months is February. And if it is able to extend this time, then you're looking somewhere out again to March. The market is telling us that it does these timeframes. Pay attention to these timeframes moving forward. We are about just coming on to halfway through this period. So things are still looking up. November potentially still up, but at least this quarter seems like it should still be finishing in the green. So for ETH BTC, something that is not finishing in the green, it's red after red after red all these months, but the time frame is getting close yet again. And the prior cycle 2017 into the low of 2020, you had 42 months. So there was a low here in September, which was a lot shorter. So you could count that as 27 months, but we passed that. Now I'm using these two dates here. That was a June top, but the USD top came in around January, February of 2018. So again, I'm using around May 21 because that was a pretty peak period. The USD top did come in later, but in terms of timing, this seems to be working out better than trying to go to those extremes. We'll see how it plays out, but so far you got 42 months after its peak, and basically it went nowhere from that point. 50% levels were hit multiple times and then rejected. So that was a major 50% level, okay? 42 months takes us into November. So we could be hitting it now in this month or into December. So things are still looking down. However, it could be on the verge of rotating from this point, in which case Solana might be seeing some further downside as well. But Solana versus Ethereum is still looking stronger for Solana, as I'll get to in a moment. In terms of Sol now, so Sol BTC, at these periods in the market, just around the election time, Sol had gone on a pretty severe decline before it then pumped. So basically pumped against USD and also pumped majorly against Bitcoin. So a much better investment than just holding BTC through these last periods. That lasted low to high about 9 months from that point, and then essentially it was all over. You could say from the low to this lower top, so 12 months, basically when more people were still in the market, November, December, but really the entire move was done by September 2021. So at this point, if we're to see that again and we start to see some red months here leading into November, December, it's not going to be any different to what happened last time before we get the turnaround and then the big move to the upside. It has been failing at the 50% levels after a few days getting above it. So that's a little bit of a cause for concern in the short term, but provided it doesn't go below 0.0018, Solana is still in the strong books and in a good position to take off after that point. So here is Sol versus ETH. It is breaking out. If this is going up, Solana's a better hold than ETH. If it's going down, then ETH is a better hold than Solana. For now, it's broken these tops and Sol is in the driver's seat, putting in a higher close here above the tops. If this is to fall under this level and close on a monthly basis, that sets it up for weakness. If it happens again, then you'd have to say that, well, it's much weaker and ETH is going to be the better option than Solana. Just looking at the strength. This is just pure maths on the chart. That's all. It's not about the fundamentals, nothing about that. And I know people want to use it, by all means. This is just saying that ETH is going to be a better return than Sol. But for now, that's not the case. You've got much stronger moves to the upside. Monthly closes under the level of the weaker side. Now price targets. This could be a bit more of the interesting side. So I'm going to take the lows to the highs. You can project it off some of these lows. We're at that 100% point now. But the main one I want to look at, that's from the previous cycle, is the current cycle, December high to the lows here. So we've hit that level once, the 50% on the extension. So the first move for Sol versus ETH. So where is this going? And looking for some resistance points for Solana to potentially take profits, right? Because it might be becoming weaker than at least ETH, or it might just be coming towards the end of the run. And the first level here is 0.08. 0.08 is a big level. You know, these gaps are pretty big, but I'll just be looking towards there for any sort of signs of resistance. If it starts to slow down like it did last time at 0.6, well, then you're probably coming towards some sort of end of the move between Sol and ETH. That's the first level. If it's able to slice through that, we look towards around 0.1 to 0.11. So for now, everything still seems on track for Solana to be a better investment, a better asset to hold rather than Ethereum. Stay tuned to the charts. If you start to see some rejection levels coming in, this layered on top of say USDT coming up to some support levels, which could slow the market down, essentially slowing those gains, well, then you've got a recipe for some warning signs to tell you to either A, don't be an idiot throwing money in at the tops because the excitement is going to be more so at these support and resistance levels, or B, maybe take a little bit, take a lot, whatever you want to do, but just take something. Even if you think it's too early and the market still has further to go, you want to be taking just something for your efforts for remaining in the markets for this long. It's been many, many months, and the last thing you want to do is see all your hard work come undone. You want more of this? Hit the like button, subscribe to the channel. We'll do another update next month. But for now, things still seem pretty well on track. Everything that we've been covering here month after month, the everything bubbles here, the everything bull market, the real estate cycle, the 18-year cycle, stock markets in all-time highs, Bitcoin looking to push to new all-time highs in 2024 after potentially some volatility with the election next week. We're seeing all the sentiment indicators coming up, and the same deal for the total cryptocurrency market cap as well. It's got some movement to be had to the upside. That's it, guys. I'll see you at the next video. Have a fantastic weekend, and I'll catch you at the next one. Peace out.